I'm going to make this more of a Q&A style. I'm here to answer any and all of your questions, whether that is deal analysis, co-living in regards to how we're acquiring deals, our buy box, all the acquisition side of things, how we're renovating, converting, how we're operating, managing, all that good stuff. I want to make this one a co-living special, primarily because that's the main strategy that I implement in my real estate investing journey. If you're a part of my co-living masterclass yesterday, you learned very specifically with real case studies, real numbers, all that good stuff, why I prioritize co-living, whether it's me as a buyer, which is what I primarily do, whether it's when I'm raising money for my deals or I'm partnering on deals as a primary lender or primary partner, why co-living is the main go-to, as well as when I'm bird dogging or wholesaling, why co-living is the focus. It just allows me to make way more returns than I ever could in any other rental strategy. So I went really deep into that in the co-living masterclass yesterday. If you missed that, you missed out on over an hour of massive value. You can always sign up for the next one, but you can definitely get some of the value by going into the free Wealth the Real Estate community and checking that out. So with that being said, I'm here to just answer any and all of your questions, as well as share a pretty sick announcement. The A to Z co-living course, it's a course and a community that I put together, just officially launched. And we have a special discount for the first 100 people that sign up. The benefit of this is co-living is fundamental in regards to everything that I do in the real estate space. It's like the main management style that we implement. We are looking for properties that exclusively, our main focus is that they work successfully as co-living. We're making $1,500, $2,000 plus on a property after all of our expenses and reserves. And so what I've done is basically packaged together everything I've learned and done over the last 5 years to build over 200 co-living units, raised almost $7 million of capital to build my $25 million portfolio and put it into a step-by-step co-living course for you. I'm giving you access to my team and myself with multiple live weekly calls focused on helping you with everything co-living related. You need help with your buy box. You need help with analyzing a deal. You need help with reviewing the property layout to check out the parking. Questions about the renovations or the furnishings or your listing or operations, great. You have access to all of that. And I'm offering it for the first 100 people that sign up for only $97 a month. Why am I doing it for a tiny, 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 tiny fraction of the cost of anyone else who's charging $5,000, $10,000+ for co-living education? Well, because it's my choice. I get to. I'm already financially free through real estate. I've got my higher ticket super investors mastermind community. In regards to co-living, I want to completely dominate the education in the same way that I've done so for free. The same way that I give away so much free education, value, tools, and resources that other people charge thousands of dollars for is the same thing I'm doing in the co-living space. People are charging thousands and thousands of dollars, $10,000. Some people are charging, it's blew my mind doing this research, up to $50,000 for co-living education. Well, I want to make this information as accessible as possible to the vast majority of people. So that's why, even if you don't join during the special pricing, you get to join for $197 a month, still a tiny fraction of the cost. Because I know at one point or another, you're probably going to be joining. Essentially, you get everything that I've learned and done put into a step-by-step course and all the tools and resources for you to get that value, plus access to my team, all that kind of stuff. And literally everything. I can't even explain the amount of value that you guys are getting for the cost, just the value alone compared to what other people are charging. Like if we were apples to apples, we charge the same. The value I'm providing is insane compared to the vast majority. But on top of that, you're getting to join that for the tiniest fraction of a cost. It's part of my bigger mission. And that's why I'm doing it. And I hope to see you guys inside, because that's how you're going to level up, whether you're a buyer, capital partner, you're a lender, co-owner, or you're on the acquisition side, you're a wholesaler, bird dog. I hopefully showed you with some real numbers, real data yesterday, how co-living completely changes the game, whether it's you getting way higher returns for your own investments, which also makes it easier to raise capital and then gives your capital partners far more security. And if you're on the acquisition side, you're able to generate much higher returns for yourself, assignment fees, bird dog fees for finding these great co-living investments for real buyers who are happy to pay the cost associated with the acquisition, as long as it's a phenomenal deal. Well, when you are focusing on co-living and then you go into the stuff that I educated on yesterday in regards to the super investor blueprint, talking about the 3 core pillars of real estate investing: deals, money, and then operations. But then we supercharge it through super investors, right? Our super investor blueprint, co-living, creative finance, and capital raising. This is how you're able to get insane returns that allow you to achieve your goals at a much quicker time frame. And if you're a bird dog or wholesaler, if you're helping people find much better deals that are creatively financed and co-living, awesome. You've just increased your value in the marketplace. You've just increased the likelihood you're actually going to make money by selling this property to a buyer. But more importantly, you're also just increasing the amount of income that you're able to generate because there's much better returns from everyone involved. The whole goal for this is to make co-living a absolute no-brainer and get you as educated as possible in this space so you can have whatever results that your heart desires, right? For those of you who are more or who are already intermediate investors who are looking to scale up through getting even more consistent creative deal flow, super deal analysis to supercharge those deals the way that I do, and to raise money so you're buying those deals using little to ideally none of your own money, that's what my Super Investors Mastermind is for. That is very distinct from the A to Z co-living community. But the A to Z co-living community has an insane amount of value, not just in regards to like what I'm saying or we're offering, but also just relatively to what everyone else is offering. And then it's like the tiniest fraction of a cost. You would pay for like 5+ years just to scratch the surface of what other people are charging. So that's why I'm making this space as accessible as possible, just like I've done in regards to deal analysis, tools, and resources for free for everyone else through my Wealth Through Real Estate community. If you're not part of Wealth Through Real Estate, you're massively missing out on a ton of free value. All right, so if you guys have any questions, please drop them in. I can bring up some of the slides from yesterday if you guys want real examples of some of the deals that we're able to do, generating us ridiculous returns, 20+% cash on cash return, even after paying large acquisition fees to the acquisitions team and buying all those deals using none of our own money. It's a great win-win. And it's because instead of just following what every guru or every person was telling me to do, we're trying to market or sell me to do, I just took a step back. I took a step back and said, I already own 26 rentals. I want more financial freedom and time freedom. How am I going to be able to accomplish that in a reasonable time frame and have the ability to actually be able to enjoy the financial freedom associated with it? That's how and why I created the Super Investor Blueprint, and then just continue to improve it, like double down on it, continue to improve it over and over and over again, and get the results that I've been able to in such a short, like a relatively short time frame, compared to the majority of other investors that I know. Don't get me wrong, I've had phenomenal mentors and guidance and education and community and all that stuff as well. I want the same for you. I'm just making this as accessible as possible for those focused in the co-living space primarily. All right, so with that being said, let me see what questions you guys have. And this is a big thing too. So Jules's question is the perfect example of why I've created this co-living community. Right now, I am potentially the largest co-living owner, definitely that I know, definitely in the real estate investment spaces that I'm part of, in regards to the number of rooms that we have, the markets that we operate in, the systems and the scalability and all the momentum that we have. There are people who have been doing it longer. They just have far less results, and that's fine. There's nothing wrong with that. I mean, for me, scale's a big part of this whole thing. So for me, it's like, well, why would I want less results and more time? I want more results and less time, right? That's why I've created this whole system. But the reality of it is, Jules's question is perfect. She said, I am so grateful for the opportunity to join, Michael. I have a potential co-living property on market. Would you be able to help me walk through the beginning to end of this property when I join? No. I personally cannot help you, Jules. It's not that I don't want to help you. There's just only so much time and energy in one day that can be allocated to stuff like this. I am building my own business. I have baby number 2 on the way. I am helping thousands of people every single month, if not tens of thousands of people on their investing journey. So what am I doing instead? I have the literal step-by-step course for you to learn every single possible thing that you need to in the co-living space. But it's not just about you. It's about you and the other investors in there being able to work together, do deals together, learn all this stuff as best as you can, have access to all the tools and resources, because your same message is the same message I get from dozens of people a week. Hey, Michael, I have this deal. Can you help me? Michael, do you want to buy this deal? Michael, I want a bird dog for you. Michael, I want to do this. In theory, yes to everything, but that's not reality. We only have so much time in a day. And at the end of the day, what I don't want to do is leave everyone hanging. So what do? I provide you guys so much education. Now this is the next level of that education, specifically to the co-living space. And it's literally step by step. I'm going to just show you guys. That's probably even better. So it's going to be housed in my free Wealth Through Real Estate community. It's just a sub community within there, because this will exactly answer your question. Because what I don't want to do is have more and more people, like if I was doing coaching the way that the majority do coaching, they do coaching so that people are constantly dependent on them and they have to come to them for everything. And that is so that the coach is able to then just benefit from every transaction that's done. My mentor, Pace Morby, taught me the exact opposite. How do we make people as self-sufficient as possible? How do we create the right community environment where people can get as knowledgeable as they need to be self-sufficient and then support each other and grow and scale? I'm a byproduct of the Sub2 Pace Morby system, and I'm an exact representation of what great go-giver leaders should be doing within the community, like the capital raising 101 course I just led in there, but also separate from the community, right? The stuff that I'm doing independently like this. The idea, I'm trying to replicate the same thing that Pace does. He's one of the only people who thinks with this mindset. I don't need to be part of every transaction. I don't need to financially benefit from every transaction. It doesn't need to all go through me. How can I empower people through education, tools, resources, and community so that you can go and execute, keep all the returns for yourself or your partners, and grow and scale in your investing journey without me being the bottleneck? Can I, in theory, help? That's what I do with the live calls. If you're on the live call, I can help you go through the DSCR loan. I can help you evaluate the property. My team can help you with you have the layout. Like, they can help you during the live call. Like, what do you think? How should we convert? Do you have any referrals for contractors there? Insurance providers? Hey, this is my plan to manage. Do you have any management referrals? Operation support, listing support, all that good stuff. We can all help you with that collectively during the call so that everyone can benefit from it. And Jules, I'm just saying this not to you in particular. I'm saying this because it's a phenomenal lead into literally why I'm creating things the way that I am, because I am a bottleneck in my ability to support you guys because my time is limited, just like everyone else's time is limited. You guys get it. And I'm literally going live and sharing stuff and creating stuff and all that far more than majority of people are doing, so I can help you guys on your journey. So then to address this bottleneck, what do? I created this freaking perfect A to Z step-by-step course, tools, resources that we implement in our business. I'm creating the multitude of live calls and community so that you guys can go and succeed in all this stuff completely detached from me, right? I benefit on that journey, but I don't want me to be a bottleneck in your success. I want you to be the driver of your success, but you just have the laid out step-by-step roadmap addressing literally every and any question that you have laid out for you. On top of that, you also get additional support through all the live calls. So it starts with the financial freedom mindset, co-living strategy deep dive, market mastery, co-living market analysis walkthrough, finding and evaluating properties for co-living, acquisition strategy, and then my recommended roadmap comparing the different strategies, renovations and furnishings, plus the exact tools and resources that we use and checklists that we use to furnish and renovate, co-living deal analysis, broadly as a whole. I mean, broadly, it's an hour and a half dedicated detailed training. Co-living deal analysis demos. There's another 8 specific trainings on here with then special going a little bit into specific other things, going to management, building a co-living empire, co-living case studies, and your 90-day launch roadmap on top of the entire operations component that's going to be added to this too, if you are someone who wants to be a more self-managing type owner. That's not my thing per se. We have the systems and tools between my asset manager and property manager plus our operations team. We're going to have that as a full resource for you guys as well. So it's not just finding deals, like how to choose and find those deals, how to analyze those deals, how to close on those deals, how to renovate and furnish those deals. It's also how you successfully operate those deals to generate you the returns that you're projecting. That is just the course. There's also all the tools and resources associated with it. So they're all sprinkled in. So I got the tools and resources, the co-living workbook, which has all the resources. You literally do this throughout your education journey. So you're not just watching videos, you're actually building and deciding and committing to a path, a process, and you get to build towards that. It's like I think a 10-page workbook that I custom created for you all. That's that. Plus then you'll get access to the calls and the calendar that are exclusive to our A to Z co-living community, which will start live in December. All right, that was that. So it makes sense, still so valuable, just curious. Of course, Jules, I appreciate you. All right, so I'm not going to be going through the entirety of this, but what I can do is answer your guys' questions as it comes up throughout this. We're gonna quickly run through some of the co-living masterclass yesterday and all the awesomeness that I gave away and shared yesterday. You already know my why, the thousands of people that I've helped and all that good stuff. If you've watched any of my trainings, you know all this stuff. Cash on cash return being the most important metric, whether you're a buyer, capital partner, you're a wholesaler, bird dog, whatever, you want to ensure that you're finding the highest cash on cash return deals. Every dollar you invest is generating you the most amount of money back. For every single dollar you invest, you're getting as much cash flow back as possible for that. That's how you drive your cash on cash return. If you're a buyer, that's great. That means you're getting way better investments. You need less investments to be able to achieve your financial freedom goals. So you get the end goal, the financial goal that you want with less properties, less headaches, less everything. Your journey to financial freedom is quicker and more efficient. When you are partnering on deals or you are lending on deals that have high cash on cash return, high cash flow, you have much more security in those investments. Even if the operator fails to operate, great. Now you take over the asset and then you get a freaking phenomenal investment that you wouldn't have had otherwise. And if you're a wholesaler or bird dog, if you are finding way better deals, your high income is justified on those deals. So the likelihood of you selling those deals, right? Anyone who bird dogs or wholesales, I know you spent so many hours trying to present deals to buyers and they're not actually good deals for them. How do you stack the cards in your favor? You freaking find much better deals. You do that through CoLiving. You find much better deals with way higher returns. You get your deals sold more quickly. You get deals actually sold, right? Actually sell them, do so more quickly, and get way higher returns because you're offering way higher returns on the investments you are providing. And simply, CoLiving is the number one rental strategy for maximize your cash flow and cash on cash return for any single family home residential type of real estate investment strategy. We won't need to go too far into this. CoLiving rental investing, I've got a whole free course on this kind of stuff for you guys. If you join the A to Z community, you get the actual step-by-step breakdown. Simply take a house, rent it out by the room, right? That's simply. I went through some examples where I showcased actual properties that we owned and how we've converted them to get the bed bath mixes that we like. Why CoLiving outperforms, and the biggest takeaway is that you get way higher cash flow. It's way more consistent, right? And you're diversifying that income through multiple tenants in one house. So it's not just you're losing all the income, it's fully vacant, or if one stops paying, it's still, you got the majority there. It's way more accessible. You can find way more of these investment opportunities out there, which is a huge part of scaling to freedom, right? It's not just good enough to do one deal. You need to be able to stack multiple of these. And yeah, that ties into your scalability. So the cash flow, the income consistency, the accessibility of the asset class and strategy, and the scalability all makes it far greater than any other rental strategy that exists. Here was an example that I went through, a property that we own in Atlanta that would lose $47 a month as a long-term rental, generates us over $1,700 a month of cash flow. That's after almost $1,100 set aside in reserves for that property. Yes, as always, I bought this one creatively. It would not have been nearly as good returns as if I bought it traditionally. Still would have been positive, just not nearly the $1,700 a month of cash flow or the cash on cash return that we got. This is just comparing the cash on cash return between buying it as a long-term rental. Yes, we would put less money down, right? We have to put an extra $36,000 to renovate and furnish the property and have reserves set aside. But that's how we go from losing $50 a month to gaining $1,700 a month of cash flow, going from negative cash on cash return to whatever this number is, because it looks so small on my end. 18%, that's a freaking tremendous deal. Like, people literally, you talk to most other investors, they're willing to buy anything that just cash flow positive right now. They're willing to buy things that have a slightly positive cash flow, any form of cash on cash return. Well, that's dumb. That can help you like preserve wealth, but that's not going to help you actually achieve financial freedom. You need high cash flowing assets that have high cash on cash return. Your money that you're investing is working extremely hard for you. Whether it's your own money or you're raising the money for those deals, you need to ensure these are really high cash flow and cash on cash return, right? That's how you get there faster. And if you want to raise money, you want to ensure there are returns that justify bringing in other people's money, because now you're splitting the benefits. But that's like literally the power of turning your single rental into a multi-income cash flow machine, right? And there's very little in the grand scheme of things. If you're spending $75,000 to just buy this house, adding another $36,000 in the grand scheme of things is insignificant compared to the massive value bump you get. The return on that extra $36,000 is absurd. It's absurd because that's what drives this extra $1,700 a month of cash flow. It's from doing this. And even though your expenses go up, your income goes up substantially so that you get these types of returns. These are two of our properties that I listed. One that's like 8-bed, 5-bath in Savannah, showing you some of the properties and the incomes. Same with a more luxury style one we have in Atlanta, where they tend to get higher income on this specific property. So just showing, I don't like to buy properties typically that can be less than 6 total bedrooms. I want 6 bedrooms or more typically. This one made a lot of financial sense because of the type of property. You can see we take care of our tenants. Most of them have been in there for a year or longer, and that is huge because that saves us so much money in turnover and vacancy costs. It's not just that we're making a ton of money on these properties and getting way higher cash on cash return, which is exactly what you need as a buyer, lender, wholesaler, or bird dog. to be able to achieve whatever you're trying to accomplish, financial freedom, more active income, partnership with security. But that is also how we're able to buy properties that are phenomenal, that build massive wealth in great areas that are appreciating greatly in value, that are large debts creatively financed are getting paid down, right? $300,000 to $500,000 debts are getting paid down every single month by our tenants. We generate ridiculous returns and we get to give back and take care of our tenants. My returns could be even higher if I did not do the things that we do. I could make a couple $100 extra a month on every single deal if I did the bare minimum. I could do my entry costs for $5,000, $10,000 less if I did the bare minimum. But because we don't, that's how we get increased income compared to the majority. We keep our tenants. Not only are they paying more, but they stay longer and they take care of our properties. Is that always perfect? No, but the whole goal of everything is to stack the deck in your favor, right? And that is what we're doing by taking care of our properties, well, leveraging the strategy, then taking care of our properties. And that is what you get to do through the A to Z co-living community. That's literally what it does for you. Talk about supercharge co-living, right? So we're combining co-living and creative financing. Why? Primarily, creative financing is essential. If you want to scale, you could still find great co-living deals using traditional loans. But if you want to scale more effectively and get way more returns, creative financing, adding that in there is a massive value add. The majority of people there yesterday are already doing or already understand or already doing creative financing. So great. This is a complementary co-living piece for them. Why is creative finance essential? Well, lower interest rates means you get way more cash flow. Lower down payments means you get way higher cash on cash return and you get more money to invest in other deals. If I'm spending a third of what I would have otherwise, I get to go buy 2 other properties with that same amount of money and get more cash flow because my interest rates were lower. And that also ties into your scalability. If you have higher returns and lower down payments, you are more scalable and you can even raise capital for those deals because they're phenomenal returns. And we're wasting far less money on banks, right? We're not wasting money on loan origination fees and this points for this and their underwriter getting paid for that and the 30 plus, all that extra crap. I just done with that. Like it doesn't even make sense anymore. As someone who's bought more traditional deals than a lot of people as well, I'm done with that. Like it doesn't make a lot of sense. There's very few cases where it makes sense at this point. And this was just a simple example that we talked about. One of the earlier deals at $385K purchase price, buying it with a 10% down payment instead of the 25% for a new loan means there's almost $60,000 less we put on the down payment, meaning that we could go buy more properties with that money. Not only that, we also get way higher cash on cash return. Assuming a loan balance of $350,000 is left over, regardless of down payment, comparing it at 7% versus 3%, you could see it's almost $1,000 swing, like $850 swing in the monthly payment with a 3% creatively financed loan versus a new 7% loan. That's $853 more dollars of cash flow every single month. That's $10,000 a year of extra cash flow. That's going to juice your returns, and that's going to allow you to bring in capital to these deals. It's going to allow you to achieve your financial freedom way freaking faster. And then on top of that, when there are lower debts, right? When there are lower interest rates, you are paying down your debts faster, which means you're also building your wealth faster. And because you're buying co-living in bigger, better markets that appreciate more, you also benefit from that. Like you also benefit from the wealth as well as the debt pay down. All of that is accelerated by combining creative with co-living. And like, this is an okay deal. This isn't even one of my best deals. This is like a fine deal that I want to share. I want to show some realistic examples. I have plenty of properties, like a multi-million-dollar property I bought with 0 down because of the way it was structured. I've negotiated 0% interest rates on multiple properties, including small multifamily to mixed-use properties to single-family homes to small multifamily to, plenty of our co-living deals. Obviously, it's on the seller finance piece. If you're taking over someone's loan, it can't be at 0%. We've taken over plenty of loans at 2.25% interest rates, 2.74, 2.99, in the 3s, in the 4s. As long as the deal makes sense and we get to get into it at the right cost and get the right returns, it's a great deal. And if I'm making $1,500 a month at least, and we're getting 15% or higher cash on cash return, that's a great deal for me. For the vast majority, they'll take a lot less to get deals done. I'm trying to help you accelerate your journey to financial freedom, not make it take as long as possible or go that route the hardest way possible. And then, as I mentioned, higher returns mean everyone wins, right? So if there's higher cash flow and higher cash on cash return for buyers, that means financial freedom faster with less properties, less headaches for you. If you're a partner or a lender, you want to partner on investments that generate solid returns for yourself and for your security. If you're a wholesaler or bird dog, you want to focus on investments that your buyers actually want to buy. And those are ones that have high cash flow and have high cash on cash return, allowing you to justify earning more by bringing great deals to those co-living buyers, whether you are a wholesaler or a bird dog, whether you're direct to the seller or you're primarily focused on the buyer and then finding deals that are already under contract. Here was an example of a deal where by the time it's all said and done, the way the deal terms was structured, it's $130,000 total entry, $48,000 of that is acquisition cost, $65K is renovation, far more than we typically cover for this, but we're adding more bedrooms than typical, and we're splitting two of the bathrooms into, they're just two big bathrooms, we're converting that into 4 bathrooms. We're just cutting them down the middle and then adding an extra bathroom next to each of them, or like as part of that room. And then that also includes almost $17,000 in reserves. Even with that entry cost, we're talking about generating a 21% cash on cash return, right? That's absurd. 21% cash on cash return. That is $2,250 a month in cash flow, right? So that's great for me as a buyer. Those are ridiculous returns. That's great for my capital partners because they get to benefit from those ridiculous returns as well, like ridiculously high returns. And that's even after setting aside over $1,200 a month in reserves. Without those reserves being accounted for, that's like $3,500 a month in cash flow, right? Account for your reserves. Don't be dumb, right? Account for your reserves. I'm just saying that's insane. A lot of people, when they talk about cash flow, they're not even accounting for their reserves. This is pre-reserves cash flow. Well, no, I separate that. It's already accounted for because of the income, because of the expenses, even at a higher entry cost, we're able to get ridiculous returns. And the reality of it is the acquisitions team, the wholesaler and bird dog are getting $25,000 for this deal. That is far greater than the majority can get on any single type of transaction. They are able to justify that because even with that cost, we're at a 21% cash on cash return. I'm happy to pay that for great investments because they're the ones providing that investment opportunity. Thank you for bringing that our way. Let's do this. You cannot do that on the majority of deals. You may get 5,000, maybe 10,000. Most bird dogs are making 500, 1,000, maybe $2,000, right? You can only justify those returns on great investments. So whether you are a buyer who gets to benefit from these phenomenal investments, you are a account partner who gets more security and higher returns because of these phenomenal investments, or you are the bird dog or wholesaler who gets way higher earnings on a transaction like this, that is exactly why the A to Z co-living community exists, is to allow you to succeed regardless of which of those you are. It's like your go-to resource for all of that. And then this is my kind of similar trainings that I usually do. I'm happy to answer any and all questions about this, but the only difference in acquiring a co-living rental is you're still buying a house the normal way you would, whether it's traditional, creative, whatever, but there's additional costs for converting to co-living. You're going to have to build out the rooms, furnish the property, and have some extra reserves set aside. This is just to round the number out for capital raising. It just goes to extra reserves, but it's to have additional reserves to cover the time to renovate, furnish, and get that property filled up. But the only difference, renovate the property, furnish the property, so have the funds available for that, and then have the additional reserve set aside to get all that done in your property income producing.